Good morning. Well, US equities closed at brand new record highs overnight on stronger than expected jobs data on top of better than expected earnings from one of the big banks, Morgan Stanley. Base metal commodities also had a strong night too, which is why the Aussie share market futures are suggesting a 0.5% or a 36-point shimmy ahead at the open, taking us further into brand new record skies. Yesterday, we did see the local bourse pass that key 7,000 point milestone for the first time in history after the ASX 200 rose 47 points or 0.7% to 7,042 points. Overnight in the US, we saw Morgan Stanley's shares jump 7% after they revealed all three of their divisions, investment management, wealth and trading, all produced more revenue than expected. And we saw the big banks' shares follow high. Morgan Stanley is the last of the six largest banks in the US to report, and 1 in 4 of the major banks that all beat analysts' expectations, with Citigroup, JP Morgan and the Bank of America reporting earlier this week better than expected results as well, on top of surging bond trading results. Also overnight, monumental gains were seen in the tech companies, which is why we're expecting our tech companies to follow higher. We saw Microsoft shares hit record levels and Google's parent Alphabet, their market cap hit $1 trillion for the first time. On Thursday, we saw the indices all close at record levels. The S&P 500 broke above that 3,300 point level after it gained 0.8%. The tech-heavy Nasdaq up the most, 1.1%. The blue chip Dow Jones surging 0.9% or 267 points. Across the Atlantic, though, things were a little different. European stocks did close mostly higher as investors really weighed up the trade deal for the first time. The Stoxx 600 rose ever so slightly. UK's FTSE fell 0.4%, and the French CAC 40 rose ever so slightly, with the German DAX closing slightly lower. In terms of commodities, we saw gold slip by 90 cents. It's now at $1,552 US an ounce. Oil has meantime pushed ahead 1.1% higher, or 60 cents higher. It's now at 58.41 a barrel. The iron ore price losing 0.3% overnight. It's now at 94.83 a tonne, and the Australian dollar has slipped. It's now at 68.99 US cents as traders weigh up our competitiveness. What else to watch today? Well, Rio Tinto just reported their fourth quarter production, and early open is suggesting a rise as traders do like what they're seeing. Rio Tinto reported a 28% jump in bauxite production, with all other lines on the quarter lower, amid Rio Tinto saying that there were operational challenges in 2019. Over the year, though, things are more favourable. Iron ore pellets and concentrates up 18%. Rio Tinto also flagged that it's increasing its investment with a $2.3 billion spend of high return projects, given the approval in iron ore and copper for the fourth quarter. Yesterday, the second largest company on the ASX, CSL, cleared the $300 share price mark for the first time after Credit Suisse upped their price target to $320 for CSL, as it's expecting a 11% jump in earnings growth this financial year and a 22% jump next financial year. Credit Suisse also says although some may consider their valuation being stretched, particularly as it's trading at a 90% premium or 90% higher than most Australian industrial stocks, CSL's valuation is justified given its market-leading position in a niche industry with strong, robust fundamentals. That's plenty to sink your teeth into today. Do have a great day and happy trading.